Charles Hoskinson's Midnight blockchain has just launched. I'm going to talk to you about this project, this chain, the ambition behind it, the tokens tied to it, and we're also going to cover a lot of other news. A lot has happened in crypto. We're going to talk about the Ethereum economic zone. We're going to talk about the possible end of the war in Iran, according to Donald Trump. We're going to talk about Bitcoin, Zcash, Aster, and a bunch of other things as well. Hello, everyone, and welcome back to Crypto Red, the crypto news channel. Let's start with the crypto prices today. What do we have? We have BTC up almost 3%, Ethereum up almost 4.4%, $2,100. So yeah, the whole market is up today. Most cryptocurrencies are up today, and there have been quite a few announcements coming after the United States and Iran, and around the possible end of the war. Iran's president says he's ready to end the war under a certain number of conditions. Donald Trump also said that in his view, the war should be over within 2 to 3 weeks. And at the very least, he said the United States would stop within that time frame, so they will stop bombing Iran. So yeah, we really seem to be getting close to the end. That's good news for stock markets, good news for crypto markets, and I think that explains at least part of today's move of cryptocurrencies. But if we zoom out a little bit, Bitcoin has just finished the first quarter of 2026, and it was its worst quarter since 2018, with a 24% drop over the quarter. So huge drop, huge drop for this first quarter of the year. That the kind of move that really reminds you how volatile this market still is. And even after all the institutional adoption, even after the ETFs, even after everything people say about cryptocurrency becoming more mature, we have this kind of drop over one quarter. I don't know if you realize how significant that is. It has been a long time since we've seen that kind of decline. But yeah, Bitcoin has really taken a hit, although obviously you've all noticed that already, that the whole market is down. Bitcoin is stronger than the average cryptocurrency, and I still believe in Bitcoin in the long term. Let's move on to the other stories of the day. Before we talk about Midnight, let's first talk about the Ethereum economic zone. It's something that was proposed by Gnosis and Zisk. They introduced a framework for creating layer 2s on Ethereum, but layer 2s that are actually interoperable by default in an atomic way. In other words, you could launch a trade on one L2 and tap liquidity on Ethereum mainnet or even on another L2, all within the same flow, the same transaction. That's basically the ultimate ambition for L2s, and so far nobody has really managed to pull it off. There have been a lot of attempts. We've heard about all kinds of interoperability processes, the AG layer, the superchain, and plenty of other ideas, but in the end we're still not there. And now we have yet another attempt, one that is supposed to be aligned with Ethereum's interest. By default, the token used to pay gas fees will be Ether. So yeah, it's meant to be aligned with Ethereum, and that's also why it has support from the Ethereum Foundation. We'll see whether it actually works and whether it ends up being just one more project on the pile of L2s. In any case, people have been talking a bit less about L2s lately, especially since Ethereum has been trying to improve the performance of the base layer itself. But here we are again with another attempt to build truly interoperable L2s. Now, let's move on to Cardano. You probably know this blockchain launched by Ethereum co-founder Charles Hoskinson, a very well-known figure in the ecosystem. He launched Cardano, and now his new blockchain Midnight is finally live. Midnight is a blockchain whose main token has existed for a while already. They launched the token before launching the chain itself. The main token, Night, is also launched on Cardano. And what else can I tell you? There are actually two tokens on Midnight. There's the Night token and there's also the Dust token, which is used to pay for gas fees. The special thing about Midnight is that it's really built around privacy. So it's riding somewhat on the same wave as Zcash and Monero, meaning the idea of public blockchain with privacy components, but not one that is fully on by default, that you can't modify or can decide what you want to share or not. On Midnight, you can choose which part you want to make public and which part you want to keep private, and that's a new approach here. Building something private, but still giving users the option to reveal information when needed. For example, for compliance reasons, with a bank, with law enforcement, or with whoever else might need certain information disclosed. Midnight is not like Zcash in the sense that it isn't just built for payments and transaction. They are also smart contracts. They have a virtual machine. And what I personally find a bit unfortunate is that they also choose to use their own programming language. It's not Solidity. It's not something else used on different blockchains. In the documentation, I saw one name for it. In an article in news site, I saw another name. The name I saw in the documentation is Impact. The name I saw on news article is Compact. Either way, it's a new programming language. And because of that, I think it's going to struggle to get adopted at scale and to attract lots of applications. And for me, Midnight is also basically an admission of failure from Cardano. I'm being very clear about that because I think it matters. When a chain has been around for years, has a strong community, has big ambition, and then ends up launching a separate blockchain to go after a major use case, that tells you something. It tells you the original chain wasn't really able to get there on its own. And their own people decided to launch something else. Because when you have a project as important as Cardano, as instead of trying to add a privacy layer on top of it, you go out and build a separate blockchain, to me that shows the limits of the Cardano model. And actually, it seems like Charles Hoskinson more or less admitted that between the line. He said Midnight is really going to be used to develop DeFi and RWAs, areas where Cardano has had a hard time gaining traction. So now they're trying again on Midnight. They're trying to relaunch the whole effort, this time with a privacy component that they think could help. Yes, there is interoperability between Cardano and Midnight. Cardano stakers will also be able to stake for Midnight and earn Midnight tokens. There will be interoperability, a lot of things, but clearly I see this as bad news for Cardano. Then again, we've known for a long time that this blockchain was coming. The token has been around for many months, and they've been talking about it for quite a while. Charles Hoskinson says he spent $200 million developing Midnight. So there you go, a new blockchain has launched, and we're talking about a project that is already valued more than $700 million with the FDV, a fully diluted valuation of around $1 billion. I'm talking about the Night token, which is really the governance token, not Dust, which is just there to pay network fees. But it gives you an idea what is being built and how they want to position it. They want to write this new privacy narrative, plain and simple. And yes, my opinion is still this. If I were a fan of Cardano, which I'm not, I would have wanted this to be built directly on the main Cardano network. I'll give you another example. We also had Sui, a project you all know, many people know. The team behind Sui is Mistin Labs, and they also launched a new blockchain named Walrus, which is a data storage project. And once again, I never really see that as good news. When you have the same team launching multiple projects and multiple tokens, I'm always cautious. Same thing if you remember Aave wanting to launch Aave Labs wanting to launch its own token for its Aave instance called Horizon. Thankfully, they didn't go through with it, but you get the idea. There's often this tendency to launch more tokens and more projects because it allows team to extract more value and serve different narratives at the same time. And to me, that's exactly what's happening here with Cardano and Midnight. So there you go. I've told you what I think about this project. I'm not saying Midnight can't succeed. It may very well attract attention, especially with the whole privacy angle coming back into focus over the last few months. But if you ask me whether this is bullish signal for Cardano itself, my answer is no. To me, it looked much more like an attempt to open a new chapter, someone else for Charles Hoskinson, and to put Cardano a little bit in the backseat and do more stuff with Midnight. Since we're talking about the privacy narrative, let's talk about Zcash. Zcash has had the security flaw that could have led to the theft of about $6 million. This was in the ZEC token, ZEC token. It came from an old privacy pool where they had been issued dating back 2020. The vulnerability was never exploited. A researcher found it using AI. He reported it to Zcash, and they moved quickly to fix it. They updated the validators. And do you know how much they paid him? I was a little bit surprised. It was really low. It was $51,000. The potential loss was around $6.5 million. So he got less than 1% of the total amount that could have been stolen. And frankly, that's not much. The Zcash Foundation could have paid more. To me, that really feels like the bare minimum. Especially since on a privacy-focused system like Zcash, someone could have tried to exploit that without being easily traced. So anyway, credit to the researcher, a real white hat, for finding the issue and reporting it to the team so it could be fixed. Next, let's talk about Aster. They just made a pretty important decision. Aster, the perp dex backed by CZ, they just decided to cut inflation by 97%. Every month, there had been a huge number of Aster tokens being unlocked, $80 million tokens, per month, roughly 1% of the supply. Now they've decided to change that and bring it down to around 1.8 to 2.25 million, and only for people staking the token. Before, those emissions were being used as incentive to get people to use the project. Now it's only for stakers. So that's a good thing for the tokenomics. It's a major tokenomics change for Aster. Aster had also dropped quite a bit in volume after exploding before. If you remember, if you look at the chart, it had even gone past Hyperliquid in terms of volume, but once again, volume is something that can be fairly artificial, or at least easy to manipulate. Open interest is still a much more interesting indicator for exchanges of this type, especially perp exchanges. That's really the metric I pay more attention to because raw volume by itself can be manipulated. And another piece of news, Tom Lee from Bitmine, his company Bitmine keeps buying Ether. Another $146 million worth of ETH was bought last week, so they're not slowing down. Strategy took a little pause last week, but Bitmine is still accumulating Ether. That tells you the corporate ETH treasury narrative is still alive and well, even if some names are taking the breather from time to time, especially in Ether. Sharplink Gaming, for example, has not accumulated as much ETH as it was supposed to accumulate, but Bitmine keeps on staking ETH. And that's it for today. I wish you a very good day. I'll see you tomorrow for more crypto news. All right, see you soon. Bye-bye.